Hi everybody, thank you very much for joining us for this presentation on what are trusts and how do they work. I'd like to give you a few seconds to read the disclaimer before the session itself gets started. I hope you enjoy this presentation and find it useful. Thank you. Hi everybody, my name is Abraham Ace. I'm a Chartered Financial Planner with Atticus Financial Planning. Thanks very much for joining us for today's session on trusts and why we use them for estate planning and for inheritance tax mitigation. We're going to look at quite a few areas today. So we'll look at what a trust actually is and how it works. We'll look at how and when we set up a trust. And lastly, we'll look at why you would actually use a trust. So firstly, what is a trust? A trust is a separate legal entity which is created to hold assets for the benefits of selected named beneficiaries or for selected classes of beneficiaries such as children, grandchildren or great-grandchildren. Alright, there are normally three parties to a trust. There's the settlor who creates the trust and gives the assets into the trust. There are the trustees who are the legal owners of the trust assets and are responsible for administering the trust assets and for the benefit of the beneficiaries and then passing them on to the beneficiaries. And then there are the beneficiaries themselves who are the beneficial owners of the trust assets and therefore can benefit from the assets when they're distributed. Alright, so how does it work? So firstly, what the settlor will do is the settlor will create a trust with also selecting the nominated beneficiaries and the trustees, and they will then gift the assets into the trust. And provided they survive for 7 years after making that gift, the value of that gift will fall out of their estate for inheritance tax purposes, and we will have achieved the inheritance tax planning part of this exercise. Right, we'll then look at the estate planning side of it. So the settlor appoints trustees. These are people that the settlor regards as trustworthy and capable of managing the trust assets in line with their wishes as well as in line with the trust deed. The trustees will manage those assets, and in certain circumstances they may be responsible for determining who benefits from those trust assets, in what proportion and when the trust assets will be distributed. And then at some point in the future, the trustees will distribute the trust assets to the selected beneficiaries. All right, so how do you set up a trust? For many people, what they do is they create a trust clause in their will so that when they die and their assets are distributed, certain assets will be ring-fenced for financial dependence, etc., and held within trusts. Under other circumstances, what you can do is during life, the settlor can create a trust and gift it to that trust, and as we mentioned earlier, provided they survive for 7 years, the value of that gift will fall out of their estate, but effectively the principle remains the same. They're ring-fencing those assets for specific beneficiaries, for all classes of beneficiaries. There are also situations where if you die intestate, so without a will, the court may set up a trust for your financial dependents or your spouse, just to ensure that they're looked after. The key question then is why? Why would you use this structure? Because being really honest, if you want to gift something to somebody, it's far easier just to give it to them directly. It costs less, provided you survive for 7 years, there's far less long-term implications. So why would you use a trust? And it comes down to two areas. The settlor wants to retain control of the assets, and they want to also protect the assets that they've gifted away. So let's just look at that element of control. So let's say when you die, you pass all your assets to your spouse. Your spouse then remarries. When your spouse then dies, is there any guarantee to stop her leaving all the assets, including the assets you left her, to her new partner, who then leaves all those assets to their children, excluding your children from benefiting from your assets at all? Now, if you want to prevent that from happening, what you do is you put a trust in place, which allows your spouse to continue benefiting from the assets, but when your spouse dies, ensures that those assets then pass on to your children and don't go anywhere else. So that's the control element. That's an example of how you would use a trust to control how the assets will be distributed in the future. There's also the protection element, because I have many clients who want to gift assets to their children and to their grandchildren. But what they are really worried about is that if they make a gift to their children, that child will then get divorced and their ex-partner will say, that gift that your parents gave you, well, I want half of it, and that 50% of the gift that they've made will go to someone they never intended to benefit from it. So once again, by gifting into a trust, you can actually ring fence those assets for specific beneficiaries and prevent that situation where the assets you've gifted are attacked by third parties and seized. And that holds true in cases of divorce, also in cases of bankruptcy, or in situations where your selected beneficiaries go into care. So why would you actually use a trust? Well, you use a trust where you want to retain control over how the assets are distributed, when they're distributed, and to whom they're distributed. And you use that by setting up the trust, appointing trustees, and nominating specific beneficiaries or classes of beneficiaries, which limits who can benefit from those assets. And also, you protect those assets by putting them into a trust and by using the correct trust, ensuring that those assets can't be attacked by third parties. All right, so we've covered in this session what a trust actually is, how and when you actually set it up, and why you would actually use a trust. If you have any questions whatsoever, this is quite a complex area, please feel free to give us a call. There'll be a slide in a couple of seconds which will have all our contact details. Give us a call and we'll happily talk this through with you. But until then, have a great day. I hope you found today useful, and all the best. Thank you very much for joining us for today's session. If you'd like any further information, our contact details are below. Please feel free to get in touch with us at any time. Thank you.